Today with us is Adam Phillips, the CEO of the FXTrading.com trading platform, and we will be discussing what's happening today in the market, how FXTrading.com differs from all other platforms, specifically in this geopolitical turbulence that we are going through right now. Adam, can you please tell me how traders right now perform considering the hugely volatile market and escalation in the Middle East? Because this we don't know where it's going to take us. We don't know how big it's going to go or how fast it's going to end. But it certainly affects every trader in the world because the volatility is huge and we see a lot of liquidations going on. But how traders at FX Trading dealing with these problems, whether it helps them to earn more or they actually start losing more?
Yeah, Victor, look, thanks for that. So with a lot of traders, obviously one of the biggest items at the moment is the weekend gap risk, right? So even just this week, we saw on Monday morning a huge gap in the oil price. We have traders that are actively trading oil, but what we see is that most of the traders that tend to be eking out some returns tend to reduce their positions or go flat going into the weekend, because that's one thing at the moment that no one knows as a trader. Is there going to be an announcement, some sort of news over the weekend which causes a huge gap on the Monday morning?
And we have these news every single day. I don't know even how big that gap gonna be, but I know there will be a gap. It is so risky, and I fully agree with you. I try to exit all my trades, or even make the stop loss huge so I won't be kicked out of the market. Clearly, it affects me personally as a trader that way. But are your traders like winning more, losing more, more liquidations on accounts, or more like 100% profit each week?
Yeah, look, I guess that there's just more volatility in the trading returns, right? Because the size of the moves is such that even using moderate leverage of 2, 3, 4 times can see huge moves in account equity. In the latter part of last year, we saw a big run up in many traders having long gold positions, and they tended to do very well. There was a clear sort of one-way trade. Whereas if we look at the situation now, gold, which typically has always been a risk-off asset, would go higher, right? A bit of a safe haven. But now you're actually seeing something different, which is where if we see an escalation in the war, it potentially is going to lead into higher inflation and people run for US dollars, and the gold price is actually going down. It's a tricky situation, to say the least. What we see from across the traders, and gold is obviously a major asset that people trade, is that the sort of keeping leverage in check means that there's chances to participate in more of these moves. But by no means is it easy for anyone out there at the moment in gold. Particularly.
You said a lot of people most trade gold, but for me, it's surprising because there's so much instruments on FXTrading.com, and I personally don't like stick to one instrument. There's so much opportunities in the stock market, energy, even Bitcoin, Ethereum. You can trade it all on FXTrading.com. I don't know why most people still focus on gold. For me, it's a big secret, but I guess the opportunities are there with the volatile markets. For viewers who don't know FXTrading.com yet, how would you describe the platform and where it sits in the market, particularly around social trading and funds management?
I guess, look, one of our core positions in the marketplace is to bring institutional infrastructure into a CFD broker. And one of the core parts of that is the social trading aspect. What you'll often find is that with many MT4, MT5 brokers, they have very fragmented social trading where they bolt on third-party plugins. However, we've actually built a full tech stack in-house. So we actually have control of the full workflow from end to end. And This means that the allocation to and the executions, the reporting and the risk are all visible in the one system. And that reduces many of the grey areas that often makes social trading a little bit difficult to track and monitor, such as slippage and latency. We actually have a zero latency social trading platform.
Adam, does it mean zero latency is that I can use scalp strategy and my followers can copy every single trade without any delay? Or is it correct?
That's correct. So running a scalping strategy, you could be trading, every 5 or 10 minutes and possibly looking for 1 to 3 pips. Your followers of that strategy will get the same fills as your master or your main source account.
Because many times I use a lot of copy trading platforms as a master trader. When I was using scalping strategies, I was in profit. My equity curve was going straight up, but my followers' equity curve was going straight down. I was like, what the is happening? And, this is because of the delay. This is because of slippage, because of latency. This plays a huge role in copy trading. In my view, this is just super important if you don't have these delays. And the fact that you have zero latency makes it open for traders who uses different strategies. Not only swing trading, like opening and holding for a month. They don't care about that slippage that much. But scalping, most people use intraday trading. This is, I think something that you can be proud of, because I haven't seen many platforms that can actually accommodate that zero latency, no slippage.
Oh, 100%. 100%. We know that that's a big pain point in the social or the copy trading is the latency and the slippage that goes down to the followers. And no one wants to be in a situation where, as you said yourself, you can be running a strategy making a positive P&L, but your followers are actually not reflecting that P&L in their accounts. It's just not fair, essentially. So by having the zero latency and the fills of the followers matching the master account, it just means that there's more transparency and better opportunities to make profits over time.
This is true. This is certainly true. And for everyone who do this scalp trade, I must insist to research where do they open an account as a master trader, because this is super important. And not to be disappointed, you must know these sort of things.
So Victor, here is the FXTrading.com client portal. And if we head down to social trading and we discover signals, here are master accounts that are available for traders to copy. And the key part here is the zero latency of the master account fills going to the follower accounts. One other component to have a brief look at is if we look to access the web trader platform to make a trade. In this case, we're looking at gold. We have inbuilt tools such as a financial calendar, news analysis, and my favorite here, market sentiment, which for the particular instrument that you're looking at will give charts on sentiment data and also indicators here around sentiment rankings. Very useful tools for traders to get a handle on how a particular instrument has been performing recently.
Social trading can look like a shortcut for beginners, but your brand talks a lot about serious, self-directed traders. How do you design social and copy trading so that it supports disciplined long-term trading rather than just speculation?
We position social trading as a tool for actual structured allocation by traders to other successful traders, and not just the shortcut to quick wins. You've got to focus on the transparency of the track record, okay, the risk metrics and consistency, not just the returns. So in our platform, traders can access the drawdown statistics, the behavior and volatility of these strategies, so they can allocate with discipline. It's about empowering the clients to make informed decisions, not emotional ones. And that's how you can shift from the sort of short-term, almost gambling into longer-term repeatable wins.
So if more professional traders come to your platform understanding that they're here for long-term, I guess on the copy trading list, you should have a really cool traders to follow. And I looked at some traders, they clearly show exclusive results. And the most important part, I think, it's consistency. What would you describe, or what skills would you give to a professional trader versus speculative trader who wants to risk and earn a lot during a short period of time?
Sure, absolutely. So if you're able to determine a strategy has a sort of a clear risk framework, okay, generally speaking, they'll run a similar style of approach across, one or two instruments. And you're able to actually see that there is an edge there in terms of trading that strategy. Now, that's not to say that there may not be some form of regime shift that could happen at some point in time. But by having those clear metrics around how they've traded, you can actually see the trades and these other statistics. It helps you, especially if you're just beginning, that you can actually make a small allocation into these traders. I think some of them might be minimum of $50 or $100, and you can actually track how those trades are coming through into your account at the same level as the master account.
And Adam, if you would, choose one most important skill that differs a pro trader from beginner, what would that skill be?
The one skill would definitely be risk management.
Risk management.
And that relates back to the trade size. A lot of people will use scaling in methodologies, which is fine, but you don't want to have that to such a level that you overexpose the account at any particular time. So you need to essentially control your risk, because that's what you can really do, and seek the returns, not the other way around. You don't want to go and try to, say I must be making 10 to 20% a month with a 10% drawdown. It's more, okay, look, I'm going to have my drawdown set here. This is the trade sizes that I'm going to deploy with this strategy, whether it's manual and discretionary or automated, and then allow over time the returns to build up.
Speaking about the risk management, I continue teaching people how important that is, because I say to them, if I give you my strategy, which is working very good, showing perfect results, with good risk management, you will see result. With poor risk management, no strategy will work for you. It doesn't matter if it's a gem or whatever, you will not make money. So it is certainly the most important skill that you have to develop. And I think to develop it, you need just to have a discipline. That's it. And this is what most people missing. They greedy. They want to go for this profit without understanding that without risk management, they will lose everything sooner or later. So yeah, and discipline will help them to stick to the plan. Adam, and with all these risk management strategies, this huge volatility doesn't help much, because while using small risk, the volatility is getting higher and higher. And specifically, it relates to the gold and oil prices as of the recent times. We might see oil prices skyrocketing. We might see oil prices dropping and collecting all these buying liquidity, because stop losses are quite low right now. And I think there is a big chance actually that we will go for that liquidity, because at the top there is not much of it, but yet it will, in any case, will provide opportunities for the trader. And what do you expect will be happening within the next month, maybe 3? I know it's a long term because everything changes so fast, but what do you think the most probable scenario, because no one knows what's going to happen. Let's be clear. What's the higher probability scenario for the oil price, you think?
Just like everyone else, I don't know where the oil price is going to be heading. I think as sort of the global community has woken up and just realised how critical the Strait of Hormuz is in terms of allowing crude oil to flow. And even though it only is about 20% of global supply, we're seeing these other impacts occurring, such as price. I know here in Australia, in Sydney, the price of fruit, food, vegetables is increasing due to increasing transport costs. From a trading perspective, the only thing you can really do in terms of being involved in that crude oil market is to just make sure that you do have stop losses on your trades, because one piece of news and you can see it shoot 10, 15, $20 higher, which means there's plenty of opportunity there, but there's also plenty of risk. So anyone that might have traded crude oil, for instance, when it was down at 50 and $1 was a big move in a day, your trade size should probably be about 1/5 of what it was back then. That being said, there are we've had some clients that will leave some orders up high to go and sell, looking to take advantage of a spike. But again, anytime you've got a position in that market, make sure you've got a stop loss. That's the only thing you can really do as a trader, right? Is just have your risk in place.
Clearly, Adam, we don't know where the price is going to be. No one knows. And if trader tries to, I'm 100% sure he will definitely lose, because we're playing with probabilities. Any professional trader knows that. And, I've been analyzing the market, everything, stocks, indexes, Forex, crypto. And I found interesting pattern that assets, which implies the risk on is here, are actually growing. And risk off are most probably will start going down. And one of the examples is Tesla. I just bought Tesla, by the way, yesterday. Everyone thinks it's a car company, but it's not. There's so much of that. Like the
technology play.
Yeah, so many. Like they are building these robo cars, okay, which is a massive thing in the future. They are building robots that can replace the human work. They working with the AI, and they're controlling the network of satellites, the internet. This is massive. So I think Tesla will grow, despite that everyone thinks it's a car company. It's not. It's not. And, they're taking a big part in AI. I think this will be one of the main drivers of the risk on in the future, at least in the next 1-3 months. What your take on AI? Does it has that potential to grow, or it's a bubble? Because, clearly there is not enough infrastructure right now for the AI to go ballistic. And I think there are many limitations for this technology right now. But what's your take on that?
Oh, AI is such a huge area, right? And there's so many advancements that have been made in the last, even several months with Claude Code and agentic workforces, agentic agents being able to, go and do autonomous work. I'm very excited about the future in terms of AI and what it's going to do, and the ability to make lots of things far more efficient. Not quite sure what I think about the home robot. I know that it's probably coming, right? If you've got something which can help you do things around the house and do sort of manual labor, why wouldn't everyone want to have something like that? I have seen AI in the trading space have some sort of mixed results. One thing that AI can do is it can, for instance, come up with a trading strategy that looks perfect on, for instance, the euro dollar, or maybe even trading Tesla, right, over the last, say, 3 years. Might be able to go and pick out the peaks here and the troughs and look like it's going to print money. Problem with that, and especially in the retail space, is that believing that the computing power of AI to go and pick a strategy on data that's looking backwards, that it's actually going to work moving forwards. Personally, I think that's misplaced. And I have seen, and not only anecdotally, but in the broker, some AI being used to try to find a holy grail. And there is no holy grail strategy or system, because markets do change. There are some regime shifts. I think it floats back to, all you can really do is focus on your risk management.
But even with that, AI can greatly help you, because nowadays I think any profession that doesn't use in some way AI will disappear sooner or later, because we need to integrate in that new world of digital infrastructure. Okay, CBDC and so on, everything digitalized, robotized, and we will have AI everywhere. It seems to me, maybe I'm wrong, but we clearly go in that direction. And I think any trader now needs to look into the ways on how he can use the AI every single day. Just start learning, start discovering opportunities. I'm not saying he should use it for making money. It's not going to work like that. But as a tool that help you to make money, I think that's a perfect addition for every single trader.
Oh, look, absolutely, Victor. The ability, for instance, for AI to, for instance, look at patterns in, for instance, your own trading behavior, and potentially make suggestions to improve things like position sizing or frequency of trades, absolutely valuable. And it can actually do it from a very unemotional perspective, right? Because as far as I know, AI doesn't have emotions yet. They don't actually feel bad if you're winning or if you're losing money or if you're winning. It's definitely a big focus at FXT on the AI component, right? And no doubt many financial services companies are very focused on this as well. So we actually have it integrated within the CRM of the business. And some of the enhancements in the platform that will be coming out in the short future are centered around some of these AI tools and abilities to do analysis of your own trading behavior, not just in terms of a particular instrument or a particular outcome that may have been, but possibly with the ability to make recommendations around how you could improve. So 100% agree that just utilizing AI, getting familiar with how it can operate, but also being cognizant of some of its shortcomings is a key thing for everyone to be looking at.
We also have FXT AI, which is in beta release, an AI that's available in the client portal. And if we look here at a small live account, it's got 2 positions on the Aussie dollar. The AI is actually able to reference live account data and trade histories. In this case, we've asked it to assess the risk exposure and provide optimization strategies. It'll grab the positions, look at the instrument, make risk findings, give us warnings about potential reversals. And it's quite a powerful tool that can assist traders with managing their accounts and their positions.
Many people using AI, even my friends, I spoke 2 days ago, and he said his friend was using AI to trade. He said each day he uses ChatGPT to give him a setup, and each day he makes $300 with AI. And I said, look, first off, the cycle will change. It will start changing and you will probably start losing. So you need to learn how to adapt your model, because it's more of a human work. AI is only the tool. And even if you're using AI, specifically like automated strategies, the execution is so bloody important. You clearly need to have that liquidity, that execution. You've spent over 25 years running institutional mandates and trading billions a month through tier 1 prime brokers. How has that experience shaped the way you think about building a retail and professional platform like FXTrading.com?
So in the institutional prime broking and execution space, the bias is towards what matters, and it's exactly what you've spoken about, right? Which is the execution quality, the risk discipline, and the operational robustness. So that mindset is in FXT, and we are built for the ideal trading conditions, right? So where the infrastructure that's there, the access to liquidity means that you're going to access very good fills, and this is going to help achieve better trading results. So the goal here is that we're bringing in these institutional standards into a platform that can actually be accessible for retail traders and also professional clients.
But what happens when there is a news release, let's say? What happens when there is a gap, the weekly gap? What happens with the stop losses with this execution? There is a lot of slippage, or we are kind of getting filled where we wanted to?
So unfortunately, in the real market, it's not possible to always be filled where you want, okay? There are gaps that occur after news events in prices, and it doesn't matter where you're trading. Those gaps are going to be part of, for instance, slippage on stop losses. But look, that being said, what you want to make sure is that your CFD or your broker has the infrastructure to handle the volatile moves in the market, so that there is consistency in executions and that you're getting the best result possible. But, there will always be some gapping moves in the markets.
Many traders don't understand the importance of good execution, where if, for example, during a regular day, there is a news release, some brokers show slippage of, I don't know, in terms of Forex, 100 pips. It's huge. With the normal spread being, for example, 5, it's getting 200, so 20 times more regular. And in my view, this is just a stop loss hunting event by the broker, which for me is absolutely no go. And before you start trading, guys, you need to research what happens during the volatile period of times. Whether you have a good execution or not may be the difference between profitable trading and consistently losing trading. I think this is one of the key features for traders, and many underestimate the importance of these small things until they face the problem with other brokers. I just skipped and changed so many brokerage firms. They all have some sort of slippage problem, gap problem. And even with a normal gap, they're making it much bigger than it is actually, to hunt these stop losses, which I believe FXTrading.com tries to completely eliminate. Is that...
We make an effort to make sure that the pricing is very fair and that spreads don't blow out on and around news events. Now, you can get a gap in price, but it's actually
It's normal. I understand.
The gap in price is okay, but then if the spreads go super wide and trigger the resting stop losses, that's not fair, right? So I can let you know that, for instance, in something like dollar yen, in the institutional market, let's say it's trading at 152 and there's a gap move to 153.4 as a midpoint. Your typical bid offer spread after that move will be sort of 15 to 20 pips, you can get slippage on a stop if your stop level's at that gap. If you find that all of a sudden you're getting a 60, 100 point wide spread, from what I've seen, it would be and appear too high.
You work closely with prime brokers like UBS, Deutsche Bank, Toronto Dominion, and Societe Generale. What execution and risk standards from that world are you now inserting onto inside FXTrading.com?
Sure. So look, in the prime broker world, the execution and the prices being received isn't viewed as a mystery. Where are they? You know, because you have the feeds, and we're bringing that discipline into FXT with consistent and explainable execution outcomes, and that includes in volatile conditions. So for our traders, they want to know when the market's volatile, that's when they need their broker and their execution platform to perform at its peak. And that's what we've been able to bring into FXT, partly with my experience and partly through the build out of the tech stack, so that there is very clean execution and the platform performs, and our clients can trust the executions they're receiving even in those volatile times. Now, as a user or a trader, you won't see all of that because that's all built in at the back end, and it's all the plumbing and the platform stability. But that's something that we are very aware and firm on, that is going to allow our traders to do what they can do best, and we give the best execution we can.
I know what you're talking about. You're talking about most traders don't see what happens behind the scenes, but they certainly feel it on the performance. They feel it on the execution, and I think this is what matters. You know, we don't need to know, you know, how electricity works to use it, but if you offer that tools that must be used, and clearly everyone sees that, at least any professional trader will see the difference on the first trade. And you know, not only that important, but I think the safety of funds is another topic, very important. And the Lehman Brothers example, they just disappeared. And now many brokerages just pop up out of nowhere, offshore, without any regulations. I'm speaking about the security of funds, because without regulation, everyone can just close the doors, take your money and run. You are operated under ASIC, NFA and other regulatory regimes, and held roles like registered representative, NFA principal and FINRA Series 3. How that multi-jurisdiction experience influence your approach to governance and client money protection at FXTrading.com?
Sure, appreciate the question, Victor. So operating across multiple regulatory regimes teaches you that governance is a culture and a discipline, not just documentation. So that perspective influences how we build FXT. We've got very strong controls, clear oversight, and operational maturity. And that's something you touched on before. We have been in business since 2014, and we operate under ASIC as well as Vanuatu licensing. Our banking is with AAA rated banks, and we also have full segregation of client funds. So the whole platform in the business is built around governance and security for clients' capital. And so ultimately, traders should feel that the platform and the business they're dealing with is serious, because that trust is earned over time. And, we are very confident that we'll continue to provide this very safe, regulated, secure environment for our traders.
Being the CEO of a big brokerage, I'm certain you are building some sort of the future vision of your firm. What do you see will be happening to the trading in general? How it will evolve? How it will change? Whether we will be trading all with the digital money? Whether the brokerage firms will be something different? Maybe what will be changing? How do you see the FXTrading.com in the future? What massive shifts are coming, maybe regulations, maybe, I don't know. How do you see it?
Well, I see that traders are going to expect their brokers to have tier one regulation. Platforms that are being offered, I think, will potentially migrate into having more digital currencies or cryptocurrency payments, both onboarding and offboarding client withdrawals. There could also be a convergence where social and copy trading will become more prevalent and accessible to people, where they'll actually be able to build small portfolios of strategies. So rather than, for instance, just have a deposit down and trade one EA or algo on one or two currency pairs, they could allocate a portion of those funds, like a fund to fund or a professional manager, to various strategies. I guess at the same time, I think that funds management itself, and that's potentially for a regulated manager or someone that is looking to run a pooled style structure, will seek just more transparency in terms of reporting and real-time visibility to clients that are allocating to those strategies.
You know, with all these regulations getting harder and tighter, I think everyone will get so regulated. Everyone will be so open with what's going on inside the firm, because regulators will make them do that to pay taxes. That's all. But that's a good news for traders, for investors, because they will be able to check what's really going on with their money. So there is a lot of changes in the future, and I think the main driver where we're going is, obviously, we spoke about the AI. And Adam, do you actually use AI within FXTrading.com, for example, to improve the service, or maybe to offer it for social trading guys in any way? And if yes or no, then are you planning to go further deep into that direction?
So AI is a definite focus of the business. We're actually seeing well over 90% of client queries actually being properly answered, 4 and 5 star responses by the AI, customer service. That's something quite huge. Now, that's not something specific just to FXT, but the ability for AI to identify who's asking the questions and to be able to give appropriate responses before it is escalated, for instance, to a human if someone gets stuck or lost, is a big part. The enhancement of user journeys for clients onboarding with brokers as well, I think has been assisted by AI being able to track and monitor how people onboard. But one of the key parts, and I think we touched on it a bit earlier, is AI can be used to enhance the trading profile or the qualities of someone who is looking to trade particular products. And that's an offering that is going to be interesting globally when, for instance, there are more AIs out there now that can, for instance, make a trade recommendation or try to find a setup. I'm not sure, though, that I would have a $5,000 account just being managed by AI, because they can go off the rails. I think using AI for potentially analysing trade setups, giving alerts is useful. Tools to help position size, how you're going to trade or potentially what market. But I still think the human counts, Victor.
Most probably will change the way we trade, we think, but it will not replace the human. I think there is no chance that it will completely and fully replace the human, because AI cannot think. It cannot create. It can only take bits and bits created by human and make something out of that. It's not something new. It makes different puzzles, different pictures from the same puzzle. This is what the AI is. So human cannot be replaced. It will never have consciousness. It will never have soul. It's just a machine. And understanding that we need to use it as a machine, which helps humans create and make profit, obviously. But in any case, without AI, I think it will be hard to compete for business, like you are using it for business optimization for your customer service, for traders to make faster decisions, better improve your strategy. It is a huge help, and everyone must learn AI within the next year or two in some or another way and start using it. What most important. Even my wife started learning AI.
I mean, it's you can feed account statements or trading strips into AI, ask it for some recommendations. I don't know how good they are, but I know the ability to analyze, and if you can give it enough context about what you might be looking to do, you can just do things a lot faster, for instance, than programmers could in, VB or Python. So there's plenty of opportunity there to have AI acting as almost like a quant assistant.
And this is exactly what it is nowadays. It's your assistant. It just helps you to make things like that, which you would normally do for a day. This makes, the entire processes in the world are so fast. Everything is changes just with the click of a mouse. You open the news and you see like what's happening. Yesterday was completely different. Today is like that. So this changing world, I think, only for us, for me as a trader, only provides opportunities. So for me, it's a very good news, because if before market was kind of boring, one directional, now it provides this opportunity. And I think for trader, each financial crisis is the greatest opportunity. Despite what everyone might say, for me, it's just opportunity, because on the fear, the market is falling so much faster than it's actually growing, right? So
I think you mentioned before you're taking on an opportunity of Tesla, right? So we do have well over 100 of the largest stocks actually available on the platform. So you can actually take a position, for instance, in Tesla or Apple. Potentially you could use a bot in there that said, you know what, I'm happy to own, I don't know, $20,000 worth of Tesla. If it goes down by another 5%, buy me another small piece. And having access to the markets and having a diversified exposure is one good way to, look to do the best from your trading and investment accounts.
Obviously, the more instruments you have, the better, because you can diversify between anything, and you can find these trading opportunities. Like I'm using the analysis on high time frames. So for me to find opportunities within Forex is very tough. It's probably one trade a month at most. But if I have a choice, a big choice, I can trade, for example, each 3-4 days, I can have an opportunity. And, I believe at FX Trading, you also offer crypto like Ethereum, Bitcoin, even those instruments with a high liquidity. Unlike, I think, the most altcoins are shit coins.
I think there was something like 47 million coins that you could now trade on various exchanges. There is no liquidity in there, right? It's all a pump and dump scheme, apart from the big ones that actually have some use case.
And this really is so sad, because knowing, many people don't understand that there is pump and dump scheme, and it's pure manipulation, and it's better to avoid this, because they will come for your stop loss sooner or later, and if you go with the bigger markets, you're actually protected from this manipulation, because it's nearly impossible to manipulate that, and that at that scale as you can do it in the crypto with the low capitalization.
They get whipped around, and they can often be a mess. Yes, there's a chance to ride the odd one, but I haven't met many successful crypto traders. Buy and hold,
Bitcoin buy and hold always works.
Well, you're old enough as I am as well to know that, look, if you've had some in there over the years, it's been a good asset to be in.
Oh yeah, DCA, it always worked, and many traders say the best strategy in the crypto market is DCA on Bitcoin. That's all you need, no strategies, nothing. Just dollar cost averaging, you will always be in profit. And I tend to agree with them because it worked always. 100% of the time it worked. So, statistically, you will continue earning in the long term. Statistically, you have a very high probability chance of success. So I think you need to understand the instrument you're trading. And you need to understand what's going on.
I'd be a very brave man to suggest that Bitcoin's going to 500,000 or up to 200,000. Jury's out. I think as long as this war in Iran can end, energy prices don't go through the roof, I think there's a good outlook for Bitcoin longer term. But one of the risks, and again, this is not my specific area, is that what if the maintenance of the whole Bitcoin network and the mining actually has some form of regulation around it if there is an energy crisis globally? Who knows? There's always outlier risks to any sort of financial assets that we invest in.
We can speculate about the price of Bitcoin, but one thing I agree with you on, I think there is a extremely high probability that the Bitcoin, due to high inflation, will continue rising. And I think within the next 10 years, we will see 1 million plus for one Bitcoin. This is my personal view and might be wrong, and the Bitcoin might go to zero. So not a financial advice. I do believe just due to inflation, the price will go up and continue rising. Yet, as usual, but these shit coins, most of them will die and nothing will be left over it. So I would advise to look at the price of stocks. Stocks, many looks amazing, like energy prices, uranium. I like the price of uranium. By the way, do you have can I trade uranium on FXTrading.com? Or uranium companies.
You can't put that in. I don't. No, uranium won't be on the list.
I think the energy sector is of interest. And even if the energy gonna go up, there is some areas in the world where the energy is very cheap. And this is where the Bitcoin will be mined. That's how it might survive, And we also need to think who created and why they created the Bitcoin, and maybe this will open our eyes on the price potential, because I don't think it's just a person who created the Bitcoin for people. I don't think this works like that in today's world. The big money would never allow something. Big money would never allow something like that to happen without their control. I mean, complete control. So someone wants the Bitcoin to be here, and it is for a reason. And if they want it to be here, it will stay here. That's my view, and I think this is something to think of. Maybe the Satoshi Nakamoto exists, but I think he's not. If you think about the next phase of growth for FXTrading.com, what's your personal mandate as CEO, especially in terms of lifting standards around platform behavior, fund management, and how client experience trust?
So my mandate is to raise standards with the broker, which is across the platform behavior, transparency, and how clients experience trust. So growth matters for us, but not at the expense of reliability or integrity. This means continuing to invest in execution quality, reporting, and how strategies are presented, so that clients can make informed decisions and stay in control. So in control when it gets real is our product philosophy. And my focus is making sure that every improvement reinforces trust, clarity, and also consistency for our clients.
Thank you, Adam. It was a great conversation, really. And I hope you guys check out the FXTrading.com, because we highlighted the things that really matters: regulation, execution, transparency. This is the safety of your trading and your money. And if you want to stay with your money and trade safely, you do your own research, check, and pay attention to these things that we have discussed today. Thank you for watching, guys, and we'll see you next time. Thank you, Adam.
Thanks, Victor. Thanks for having me.